So welcome everybody to this webinar. I'm Hannah Grant. I'm the head of the Secretariat at the Access to Insurance Initiative. The A2II, together with the International Association of Insurance Supervisors, the IAIS, regularly organizes webinars for insurance supervisors to hear from technical experts, but also from each other, and stimulate conversations about implementation practices. What is different and new actually about today's call is it's actually the first time we've done one of our webinars on a public platform. And that is why, and it's because the topic of pandemic risk really does require all stakeholders to engage and work together to try and find solutions for. Today's webinar is the first in a three-part series on pandemic risk. And today we will explore ongoing public sector initiatives, looking at both pandemic and catastrophic risk insurance facilities. And then this will be followed by another webinar on the 23rd of July, focusing on public-private partnerships. And then we'll conclude with the final one in the series, which will be a supervisory dialogue. So just for some very quick housekeeping rules. Firstly, just be aware that we are recording today's webinar. You will be muted to improve the audio quality of the call. The call will last approximately 75 minutes. We've actually saved the last 15 minutes at the end for questions. So we'd very much encourage you to think up questions as you're listening to the presentation, and then submit those questions through the chat function, which is in the right-hand corner of the screen. For our French and Spanish participants today, we are using remote simultaneous interpretation platform for you to listen to this. And this is Interprify platform, and you can actually join the platform in two different ways. One is through your smartphone using the Interprify app, and the other is through your web browser, either Chrome or Firefox. And instructions on how to join will also be available to you in the chat, including the password to log on to it. So without further ado, I would like to actually turn to Jonathan Dixon, who's the Secretary General of the IAIS, for some opening remarks. Although he unfortunately can't be with us today, he has pre-recorded a message for us, which we'll play for you now. Thank you.
Hello everyone. Good morning, good afternoon, good evening. I hope you're all keeping well, and likewise with your colleagues and families, that everyone is healthy and well. Let me welcome you to this exceptional webinar series on pandemic risk. I regret not being able to join you live for this webinar, but I am pleased at least to provide this video message to welcome you and introduce the series of webinars which have been co-organized by the Access to Insurance Initiative in partnership with the IAIS. Well, we're all aware of the impact of COVID-19 and the severe human and economic consequences that are taking a toll around the world. For insurance, a sector that is already undergoing significant change on multiple fronts, COVID-19 has become an accelerant and an impetus for innovation and agility, opening new conversations or giving added weight to existing ones. One of these conversations is a long-standing focus of the IAIS and the A2II on the protection gap for a large portion of the world's households and businesses, now with an added emphasis on pandemic risk. But just stepping back for a moment, let me say a few words on what the IAIS has been doing to support its members since the start of the pandemic. The immediate IAIS focus has been on assessing and understanding the impact of the pandemic and the risks it poses to the global insurance sector. We've also taken rapid steps to support insurance supervisors to respond to the crisis, in particular by sharing experiences on supervisory measures taken in response to COVID-19, and now starting to analyze those responses to identify good practices that can be applied more widely. Early on in the pandemic, we also partnered with the A2II on a series of webinars that provided a platform for supervisory discussion on the pandemic and to exchange views on both the prudential and the market conduct implications, with particular attention to the situation in emerging and developing economies and the effect on vulnerable populations. It's clear that the impact of the pandemic is multidimensional. It doesn't discriminate between high-income and low-income populations, but the effects are felt disproportionately by low-income populations who do not have the same resources and ability to cope and recover. The crisis has also highlighted the limits on the types of coverage that the insurance sector is able to provide alone, and the importance of exploring different approaches, such as public-private partnerships for the pooling of risk, which can help close the protection gap. Today's webinar and those to follow in the series will focus on understanding and addressing the significant protection gap that exists, especially regarding social protection coverage and business interruption cover. If unaddressed, the protection gap will continue to grow and global disparities will increase. However, we also know that taking steps to close the protection gap is a complex task and one that requires a multi-stakeholder approach that brings together supervisors, consumers, the private sector, and policymakers. The importance of finding a multi-stakeholder solution is why the IIS and the A2II have invited all interested stakeholders to this series of webinars so that we can learn from each other and apply new and innovative approaches to overcome these barriers. While recent months have been a demanding period for all, it has been very impressive to see the speed and breadth of the response by insurance supervisors to the impact of COVID-19. Moreover, I'm incredibly impressed with the commitment and remarkable ability of our stakeholders to rapidly adapt and respond to the challenges of this difficult period. I'm also reminded that after every crisis, financial services and society as a whole have tended to emerge stronger. And this is our opportunity to do so again, particularly from the perspective of inclusive growth and development. Let us collectively apply our minds to this end. Thank you for participating today and for your continued support and engagement. Thank you.
Thank you to Jonathan and his team for taking time to record this message and for those inspiring sort of opening words. Before introducing the panel, I'd just like to take a couple of minutes to explain what we mean when we refer to pandemic risk, and more specifically, the pandemic risk protection gap. As Jonathan touched on, while there have been previous epidemics which have had a notable impact on human health and the economy, the impact of COVID-19 looks likely to be greater than what we've seen before, or far greater than what we've seen before. And the reasons behind this being the speed with which it spread around the world because of interconnectivity, and largely also because of the independence of global supply chains, and the unprecedented government measures curtailing social interaction, which, while slowing down the spread of the virus, have also had far-reaching economic consequences. According to the International Monetary Fund's the April 2020 World Economic Outlook, the global economy is predicted to contract by 3% in 2020, which is actually far worse than the financial crisis in 2008 and 2009. Global trade, meanwhile, is expected to fall between 13 and 32% in 2020, according to the World Trade Organization. I mean, those are huge, huge figures. And if we go on to the next slide. However, the impact of COVID-19 on different industries has been mixed. Companies that rely on consumer confidence and foot traffic, including retail, hospitality, entertainment, and airlines, as you can see from the graph on the screen now, have been the worst affected. In many cases, people and businesses simply didn't have insurance to cover themselves against the risks emerging from the crisis. Then if we go on to the next slide. So even where policies were in place, it actually remains unclear whether pandemic risk was actually covered by the policy. For example, standard property coverages, including business interruption, would often have physical damage as the trigger. And in the case of COVID-19, there was no physical damage. Or workers' compensation cover requires that illness occurs in the workplace. And in the case of COVID-19, which spreads so rapidly, it's almost impossible to determine where the illness was originally picked up. But I think we can all probably agree that if greater insurance protection had been in place, government balance sheets would not have been so badly affected, and many individuals and businesses would have been spared from economic hardship and closures. However, the risks are huge, and to ensure in the event of a future pandemic that greater insurance protection will be available, and that insurance is better integrated with other risk management and risk mitigation practices, it does require us all to work together. So with this all in mind, as Jonathan said in his introductory remarks as well, this is why the IAIS, together with the HYI, wanted to organize this pandemic webinar series. The risk is too big for the private sector to hold alone, and public sector initiatives play a vital role in the design and delivery of greater insurance protection, particularly in developing countries. And this now brings me on to this morning's panel. I have 4 highly experienced and excellent speakers coming from a range of public sector organizations. I have Lesley Ndlovu, who is the new Chief Executive of the African Risk Capacity, having previously been CEO of AXA Africa Specialty Risks. I have Craig Thorburn, who is a lead specialist at the World Bank. Craig has been engaged in a range of insurance market development efforts across the world. He's also a champion for inclusive insurance at the IIS and HYI. I have Arup Chatterjee, who is a principal financial sector specialist at the Asian Development Bank. Arup is currently responsible for leading financial sector development initiatives, and prior to this, he was a member of the Secretariat at the IAIS. And last but by no means least, I have Jan Kellet, who is a disaster and climate partnerships advisor at the UN Development Programme. Before that, he was a senior research advisor with the Overseas Development Institute and program leader at the Global Humanitarian Assistance Programme. So a big welcome, good afternoon, good morning to all of you. What I'm going to do is actually split my questions into 2 different sections. So firstly, we're looking at the current pandemic and the role that insurance has played. And then secondly, my second question will look forward at the work underway to address future crises. So maybe Jan, if I turn to you first, how has your organization been responding to the current pandemic? What schemes did you already have in place that have helped your response? And I'm going to ask the same question actually to all panelists. But Jan, if you can lead off, thank you. Jan, I think you're on mute. Sorry to... Perfect. Yes, we can hear you well.
So an apology right from the start. I sent you the old bio, obviously, because actually the main role that I have now inside UNDP is that I'm the corporate lead for insurance and risk finance. Hence this conversation today, and really pleasure to join you and of course your panelists, distinguished panelists, and of course all of the colleagues who are joining and listening. I think really starting right at the top, as Jonathan was saying, and as indeed you've emphasized, the blindingly obvious two takeaways for me right now are: one, that this of course is blindingly obvious to pretty much all of us, I'm sure, is that this is not about health. This is about pretty much every aspect of life and living, starting with health. It's its nucleus, if you like, and its focus. So it's permeates into every aspect of what we do, and therefore from an insurance perspective, which I see as pretty agnostic to sectors, it's pretty relevant to everything. We can almost see that there is a significant potential for insurance risk financing to play its role. I think the second part of it is that we're absolutely smack bang in the middle of it, or in some cases even just the start of it. And we see that, I was just looking this morning at the COVID statistics in countries, and depending on which stats you look at, I would look at the top 20, and I think that about 13 of those now are all middle income countries, rising rapidly in terms of the numbers of cases, which is very worrying. And indeed, in fact, the news from our country offices from these countries, and in fact pretty much all of our countries, our developing partner countries, is indeed that we're really at a very critical point. So UNDP's role, well, I'd say that it's evolving even as the crisis evolves. And right at the beginning, the early part of it was, for example, supporting WHO, leading on health, obviously, with all of the procurement work, because we have a significant procurement operation country by country, so supporting all of that. Secondly, working on crisis management and response, which is a traditional UNDP strength in many countries, working with NDMAs or other similar institutions and agencies at countries. But then also starting to look at the future and looking at the socioeconomic impact, which I think that's where it's particularly key, I'd say. So in terms of how the UN is structured, so UNDP is the technical lead for socioeconomic issues and socioeconomic recovery of COVID, if you could say recovery even while we're actually dealing with the crisis. So, you know, it's almost like recovery right now, but also just while we continue to deal with the issues. And if you look at what are the main areas, you're going to be unsurprised to see what they are, in a sense. What are the main areas, the recovery plan of the UN and UNDP in particular is looking at? Issues of governance, issues of poverty, issues of making sure we don't lose our sight on climate action and the environment and biodiversity while we focus on these other big issues. How social protection really needs to be increased massively across many different countries. And from our perspective, one of the key areas is how we can help countries with long-term development planning and taking on board all of the COVID lessons, if you like. So that's, if you like, general UNDP. From my perspective or my team's perspective, you know, we are right in the middle of launching our what's called our insurance and risk financing facility. This is the first time UNDP has ever had a single, if you like, coherent one-stop shop across the institution, and therefore also our program countries to provide support on all aspects of insurance and risk financing. We're building it even as we built it. We are building it even as the virus arrived. So, and across our 5 work streams, I'll quickly go through them: inclusive insurance, sovereign risk, natural capital, the investment side of the insurance industry, and the integration of insurance and like risk modeling, risk analytics into development. All of them are tilting towards COVID, even as we speak, because they're having to do that and they're having to adapt that. Maybe about 6 months or a year ago, if we'd set things up earlier, we would have been much more likely to have dedicated tools, services, programs, you know, ready to go, if you like. But now we're actually working to build them even as we move forward. So what I'd say is maybe a final point, because we'll talk about maybe the specifics of some of those initiatives that we have underway later, is perhaps it's just a final point, which is really coming through a lot of what we're doing is, for example, is socioeconomic analysis of all developing countries. We've done 60 so far. I'd urge you to have a look at the UNDP website and have a look at those. They are a really interesting insight on what the conditions are for COVID and socioeconomics. What we're really seeing coming through all of these is not just a question of what we can do now to return things back to the baseline that it was before, but because COVID has really pierced and highlighted the vulnerabilities that exist, we can't go back to accepting those as they were. And here I think insurance and risk financing has a massive role to play to make sure we don't go back. Over to you, Hannah.
Thank you, Jan. It certainly sounds like you're very busy at the moment at the UNDP, and it's good to hear that you have new initiatives for the current crisis, as well as we'll get on to in a moment, more forward-looking in case of things happening in the future. I have a request, this is just before I go on to the next speaker, from the interpreters, that if people can just speak quite slowly, because we have got a simultaneous translation into both French and Spanish. So please, when you're making your remarks, just make them quite slowly. Craig, I think I'll go on to you next, because you also provide a sort of a global perspective on, the World Bank has a global perspective, so it'd be good to hear what you're also doing for the current crisis, the COVID-19. Thank you.
Yes, thanks, Hannah. And I'll probably start by saying, well, look, we kind of have a similar perspective to what Jan has given us, so I won't repeat that. I mean, the engagement of the bank in countries has covered a very wide range of what people are interested in, and a lot of the actual work that we've been doing in individual countries has been sort of what I would describe as sort of budgetary support interventions, providing financing to governments as part of their immediate emergency response. We have had, I think, as some people might be aware, we had a pandemic facility in place beforehand. This had been put in place a couple of years ago, financed by some pandemic index bonds, which we had issued, and so those had come into play already, and that was part of our financing for the response. It's an interesting example because I think we're likely to see more of that in the future and in larger amounts. We've been monitoring the industry and engaging with the industry to see what the issues are and how they've been responding, and just to be on top of what's happening around the world on that front, both for the sort of conventional type products that we're all familiar with, and also some specific issues on micro-insurance and mobile insurance and health responses there in particular. And also regarding the work that supervisors are doing. I think what we've seen so far is that most supervisors have responded to the crisis in terms of what we would call short-term issues, how they adjust their working arrangements and their work plans and such. But we'll also have an eye on where this goes in the future in terms of supporting their technical change. I think that's similar to what you've been doing at the A2II as well, monitoring supervisory initiatives and developing examples and data sets of that kind of work. So that's interesting stuff that we can always sort of pick up as the conversation goes on today.
Cool. No, thank you, Craig. And Lesley, I'm now going to turn to you to tell us about the African risk capacity. And I mean, you've probably had, in an African context, it's not the first sort of epidemic that's happened, but it'd be interesting to know if any of the lessons learned from that have helped you in the response to COVID-19 at the moment.
Thank you very much, Hannah. Good morning, good afternoon, good evening to all the listeners. It suffices to say that the current pandemic's been a bit different from the other catastrophes that we have had in terms of the scale and the impact of this particular pandemic, because it has touched every country, depressed economic activity, and led to unprecedented lockdown and confinement measures. And this has, in a way, exposed some inequalities that exist within the society, as Jonathan Dixon was alluding to in his opening remarks. In Africa, we have in particular the challenge of having a large informal sector where people have to earn a living every single day. And if they are confined, then this has disastrous economic consequences. So governments have to really balance the slowing down the spread of the disease through confinement, but also allowing people to do the activities that they need to do in order to be able to earn a living. One of the things that have been really exposed as a result of this pandemic is the need to have a comprehensive approach to disaster risk management and financing. On the African risk capacity side, we have been long-term champions of this approach, including having a risk layering approach where the government set aside funding for the more frequent and less severe events, such as recurrent droughts, and then have some financing instruments from global financial institutions such as the World Bank, CAT-DDO program that allows countries to draw down financing after the occurrence of a predefined catastrophe, and finally using insurance as a tool to manage the risks that are less frequent but have a high severity. In the particular case of African risk capacity, we finance the cost of response. So in the case of, say, a drought or a flood, we will not be covering the full economic cost to the country, but will be providing financing to the government to allow them to respond in a timely manner. We use parametric insurance, which ensures that we can pay out within a week or two of the insured event happening, giving the government the liquidity they need to start the relief efforts. And then just to focus a little bit on what we are doing specifically in relation to the COVID-19 crisis, we have created a customized model that allows governments to analyze the exposure that they have to COVID under a range of scenarios and lockdown assumptions. This then at least gives the government a very good sense of what their exposure to COVID-19 is. And we will obviously talk about what we will be doing in the future to make government and society at large more resilient to COVID-19. And then maybe just to make the final point before I turn it over to you, as Jan said, we should not at this point in time forget that there are still other significant risks that exist, especially those linked to climate change. We have seen so far droughts in Zimbabwe, Madagascar, and in Senegal. And also we have seen floods and locusts in East Africa. So even as we think about COVID-19, we still need to take this comprehensive approach to disaster risk management and financing. So thank you. I will leave it here.
Thank you, Lesley. And yeah, just picking out a couple of the things you mentioned there, I think it was helpful how you explained how ARC is helping governments to sort of model the risk. So aside from the risk transfer, it's a value that your organization is just providing to governments to help them better understand the risks they're facing. I think that's certainly a nice example of how the insurance industry can also help beyond, just the insurance product itself. And you're right, we should not forget about climate change just because of COVID-19. That all continues, unfortunately, at the same time. Arup, turning to you now. So it'd be great to hear what the Asian Development Bank has been doing to help support those, I guess, particularly in Asia, address COVID-19.
Okay, thank you, Hannah, and good afternoon, good evening, good morning. In Asia, it's now almost late evening. From the very outset, so far ADB is concerned, we have been very quick and flexible in our response to meet our members' needs. We have a $20 billion assistance package, which we used for the worst affected countries in Asia and the Pacific. And the focus was on helping and saving lives, ensuring economies rebound as swiftly as possible, something which Craig alluded to. Our support has a number of features. We are delivering grants for emergency food programs, medical needs like personal protective equipment, test kits, and laboratories. While the pandemic was on in certain countries in Asia, there were catastrophes like tropical cyclones and earthquakes. So we also, some of the grants were also diverted towards meeting some of the immediate needs following these catastrophes. We also, and so that is one aspect which we need to be cognizant about, something which also Lesley mentioned. It's not pandemic alone, but number of disasters happening at the same time. We are also providing budgetary support like the World Bank, and in most countries, it is all the multilaterals are working together. And this is mainly in the nature of budgetary support, counter-cyclical support, and more or less it is looking at an integrated package to support efforts to mitigate the negative fallout in the health sector, in the social sector, and also the economic sector. We are also providing our countries with economic analysis to help policymakers better plan for the recovery. Something which I also should mention is there have been certain existing facilities of the ADB, like we created a National Disaster Risk Management Fund in Pakistan. So we are using some of those facilities also to channel funds to various provincial governments and also directly to the beneficiaries using existing systems in place. Related to insurance, one important feature which we have observed in many countries, particularly I would like to point out Indonesia, India, and Nepal, where countries as part of the package ask for funds for insurance for frontline health workers, and this insurance would be purchased from the domestic insurance companies. So that is a very important thing, and perhaps later on in the UK, they also came out with a similar solution for protecting the frontline health workers. We are also providing trade and supply chain finance and also SME finance so that there is crucial support for economic growth. We don't want the businesses to stop. There has been also support in terms of social protection. There has been wage support schemes for low-wage workers to help the smaller firms stay in business and prevent job losses. We have cash transfer schemes and other social protection measures to protect the poor and vulnerable groups of households. And here we have had a very particular focus on women and the girls. So that is something I would like to flag. We have also been coordinating with international financial institutions and the WHO and UN agencies for developing a very coordinated approach which is both effective and efficient. And we remain committed to the members so that they can traverse the path to sustainable development through projects which even go beyond COVID-19 pandemic. So we are looking at sustainable development, which remains our focus in terms of building back better. We feel that that should not be compromised. Climate change is an important challenge, and we want to ensure that sustainable development focus is not missed. So we are doing what we have always done throughout in our history spanning last 50 years. We are on the side of our developing member countries at this moment of need to help them pave the way for a better and brighter future. Thank you.
No, thank you, Arup. And again, a lot of initiatives underway there. And I think that would just, concluding the very first part here, I would certainly conclude that it's great to hear that all organizations have a lot of initiatives that are immediately underway now to help individuals, governments in the respective countries. It sounded like some of them included insurance, but I think I was also picking up that quite a number of them didn't actually include insurance. And that's maybe something that we can now reflect on a bit more as we move sort of to the second part of this discussion, which is really looking forwards and saying, well, it has exposed an insurance protection gap, the current crisis. It's still ongoing at the moment, but we still have an opportunity to think for the future and how to think about insurance can provide more protection, greater resilience going forward. I'm going to hand back. I was going to hand back to Jan again, but I'm not sure if Jan's still with us at the moment. I can see his pictures popped off my screen. So maybe you're back. Perfect. Good. So Jan, I'm going to pass over to you and to really talk about looking forward now and sort of the future catastrophe or the future pandemic and some of the thinking that's going on at the UNDP.
Okay, thank you very much. And it was really interesting to hear from the other colleagues as well in terms of I guess maybe there's a lot of underlining things which go through all of these areas. And I'm picking up across all three, I guess, were this issue of actually the world of crisis and risk and so forth hasn't stopped happening. All of those other issues, those other vulnerabilities, if you like, continue with us. And that's a massive, of course, challenge. COVID is both here and it's exposed all of these things as even more significant than they were before. Issues of vulnerability, inequality, etc., lack of resilience. And in a sense, that's really how we in UNDP, and specifically the Insurance and Risk Financing Facility, which, as I mentioned, we should launch in September this year. It was going to be June, but as you've probably seen, some events have changed the date. It really has focused our attention on, if you like, trying to look again at the underlying issues which are very relevant to the why COVID has had such an impact. So, for example, within the existing programming that we've got, so for example, we have an initiative which is to work in 20 countries over the next 5 years, together with the Insurance Development Forum, and particularly the private sector, and to an extent, mutual and cooperative sector as well. And actually, institutions and regulations and legislative work all play a part of that. So we're already thinking now, as we're developing this initiative, how we can integrate pandemic and health crises into that work, which we probably wouldn't have done so before, or certainly not to the level. And that's absolutely, that's relatively new. So we have been taught a lesson, if you like, that we have to do that. Certainly what we are going to do is integrate risk modeling and risk analytics into our work on public financial management. So you may be aware of a program which the UN is doing on sort of medium to long-term financial management with countries. It's called the Integrated National Financing Framework. So we're already working to integrate risk modeling into that and really adapt what the current programming and financing we have to really looking at issues of pandemic and health risk and how critical countries must look at them. We're also looking at how we can, for example, with mutuals and cooperatives, look at different kinds of products that were previously existing. I think parametric business continuity insurance for all kinds of disasters for SMEs has been picked up as a major issue in many places, and I think that's one of the key areas. So that's all kind of happening. But actually what I would like to just focus a few comments on is actually going beyond that, which is, can we use this moment to look beyond the vulnerabilities that we live with and basically almost accept each and every day because they're part and parcel of, the slow process of development. Can we strike through these in a much more dramatic way using the moment of COVID? The issue, for example, of debt swaps for massive investment in nature in light of COVID, or what about debt swaps for health, for example? What about debt swaps for insurance or risk finance, for example? These kinds of initiatives, can we look at this on a significant scale? So, for example, we are also within our COVID offer, we're also looking at some moonshots, what we're calling moonshots, big ambitious plays to say, can we change things? Can we work to transform things together with all kinds of actors, including, of course, insurance supervisors and regulators? So I just want to pick out on three. There are many. We have 5, but there's 3 which I just want to focus on. For example, in Africa, there are 408.6 million people who do not have access to universal health care. What would it take, for example, to provide through microinsurance, health insurance to the entirety of Africa? So we drew up an initiative for that at about $16 billion a year, which is a drop in the ocean when you consider African debt. What about protection of SMEs on a very significant scale? I mean, Lesley mentioned about informal SMEs, and of course there are also formal SMEs, which are also very delicate and very fragile. So we have an initiative, for example, there, 10 countries in Southeast Asia providing parametric insurance for 170 million small companies. And there's a huge amount of money which would be required to do that. But actually, what is the downside of that? What is the counterfactual? What does it mean if we don't, we, the international community, countries, etc., actually do that? And then the third one is a really massive integration of pandemic and health risks, especially for their secondary impacts, into issues such as public financial management and indeed government policy for private financing. Those are 3 ways in which we want to do that in 60 countries. We're already looking at 20 countries as part of existing financing. So I just wonder, where it'd be interesting to hear from the other colleagues as well. Can we use this as a moment to look beyond our current almost portfolio and the way we've worked and so forth? And can insurance risk financing play a role which is much more significant as part of a more significant tackling of the underlying vulnerabilities which we pretty much take for granted each day? Thank you, Hannah.
Thank you, Jan, and thank you for broadening out the discussion there. I think that's really helpful. So Craig, then turning on to you, it'd be interesting to hear about what initiatives the World Bank has underway, looking at the catastrophe, the event now, and thinking what you can do in the future to address future catastrophes. And this definitely picking up on the points that Jan was making about let's not be limited by what we've done so far, think of new solutions.
Yes, absolutely. I mean, I think there's a couple of areas where we're sort of a little bit fooled by our own success so far in terms of the sector. Is that we haven't seen in the pandemic so far a sort of a widespread financial distress in the insurance industry, and as a result, broader stakeholders outside of the insurance supervisory agencies and such are inclined to say, well, if there's no issues there right now, we've got other things we need to worry about. So they're not really thinking proactively and positively about the future as much as hopefully it will turn around to in the near future. I certainly think that Jan's points are very good in terms of how we can make use of this in a much broader set of goals and really sort of expand our vision a lot. And I know one of the challenges we have from this current discussion about protection gaps is that it's true that the pandemic has been a challenge and going forward is a challenge for providing the protection that clearly some people who have insurance, that they wish they had the pandemic cover and the exclusion is problematic. But simply providing the pandemic cover in some way or another is not necessarily, I think, the whole solution, because it's pretty clear that the commentary we're hearing about this pandemic shortfall of cover is not just because of its pandemic, but because of the actual insurance product itself is not yet fully meeting the needs of those customers. People want business interruption coverage, and a lot of people want business interruption coverage that's about business interruption rather than contingent on something else. And so purely providing a pandemic solution to that through whatever methods we can is not going to get us to where the customer wants us to be. And I think so that's the first challenge, is really not just sort of putting a Band-Aid over the pandemic shortfall, but actually better understanding what these customers are really saying they need. And then the second issue is kind of the same issue that we've had without the pandemic, is that there's a lot of people who don't have insurance. So we pick up on Jan's comment about health insurance, for example. People need health insurance at a time of a pandemic, but they need it when there's no pandemic too. And a lot of people just simply don't have it. And so this is, in a sense, the same old problem we've always had that we still need to fix. Now, we're seeing in the pandemic that there's some real opportunities to step forward in the way health services are delivered and how perhaps health insurance can be provided as part of that solution. But I think we still need to go a long way to really grasp the opportunity to make that into a reality. And so that's, I think, the challenge as we look at how we put together solutions that might help us in a future pandemic. I think we also need to step out of those and say, let's take the opportunity to actually solve the problem more broadly and not just wait for the next health crisis when the crisis could be something else.
Thank you, Craig. And Lesley, now on to you. So it'd be good to hear about what initiatives ARC has underway, sort of looking forward to future catastrophes. And also any thoughts you have joining with sort of Jan and Craig around how insurance could play a bigger role in the future more broadly.
So I look at this problem along two dimensions. The first dimension is to deepen, and this is what we can do within the insurance industry. And the second dimension would be to broaden which is what we can do in partnership with others. In terms of what we can do to deepen, for us as African Risk Capacity, it is really in line with our mandate because we want to be reaching as many vulnerable people as we can through insurance solutions. What Craig said to me really resonated because it's not just about providing the products that we have always provided, but really listening and understanding the needs of the clients and providing solutions that are most relevant to them. So on the ARC side, we will be launching an outbreaks and epidemics product. We had planned to launch it even before the COVID-19 pandemic, and we intended to cover 4 diseases: Ebola, Lassa fever, meningitis, and we have then decided to expand it to include COVID-19 because it has had really a significant impact on the African continent. However, that said, I should hasten to add the fact that we only cover the cost of government response, so we will not be covering the full economic cost of COVID-19 because this is really beyond the balance sheet of any one insurer, and we will need a multi-sector approach in order to have a product that can cover losses of that magnitude. And then just to go back to something that I said earlier on, we will also be providing risk modeling capabilities to governments just to enable them to understand their exposure, not just to COVID-19, but to other diseases as well. So on the deepen side, I think if I'm to summarize it in a few words, it's really developing solutions that are most relevant to the clients that we serve. And then on the broadening part, we need to more effectively partner and work with other people, such as the development financial institutions, because these institutions also have a public service mandate. We need to work with, on our side, with reinsurers. So in this outbreaks and epidemics cover that I'm talking about, we have structured it as a catastrophe bond that we will be putting out to the capital markets. So this is an example of how the broader global markets can be leveraged to provide a cost-effective solution to the people that need it within Africa. We, of course, need to work with governments as well, because we see governments as the entry point to providing these solutions, given their reach and their convening power. And I know that we will probably talk about regulators and supervisors later on, but they also have a big role to play in terms of creating the enabling environment that allows some of these solutions to be implemented in the markets. Insurance is still a country-by-country industry, but the solution cannot be implemented on a country level scale. It needs to be implemented across many countries, and there is some regulatory dispensation that will be required for if a solution that can reach many countries is to be created.
No, thank you, Lesley. And then Arup, I'm going to turn on to you now. So it'd be good to hear about what the ADB has underway, thinking about future catastrophes, and then also just a few thoughts of your own on the greater role that insurance can play.
Okay, thank you. Following on what Lesley just mentioned, the enabling environment is a very important issue, and ADB has been carrying out diagnostic studies, and we have developed a methodology and framework for carrying out diagnostics for disaster risk financing and insurance. So this methodology was focusing only on physical hazards. Now we will be extending this methodology to cover epidemics and pandemics, and we'll have 4 more countries to look at it in the near future. So that is number one, and this has been necessitated because pandemic is seen as a disaster, and many of the disaster risk financing institutions in the government or the disaster risk authorities, they have been used for pandemic emergency administration in many countries. So the fund flow has been happening through these institutions. So we want to understand this a little bit better, and in terms of a risk layering approach, what could be the solutions at different levels and where insurance can intervene. That is number one. In terms of as part of this same exercise, we will also be having extensive dialogue with the ministers of finance, health, agriculture, and other stakeholders, including the insurance industry, to find out whether an epidemic risk financing framework can be developed at a regional level, and what should be those elements to be factored in for managing epidemics at a national level. So broadly speaking, this can at a later stage translate into a regional pool-like arrangement, but at the same time you need to have national pools also in place. So that is something we will be discussing with some of the key stakeholders in our region in the near future. We will be also carrying out certain feasibility studies, and this is coming from what Jan mentioned. Of course, we will be looking here at providing solutions at the municipal government levels, because the risks are very, very localized in many ways, especially in different geographies. That some area might be flood prone, some may be earthquake prone, and things like that. So we would like to work with municipal governments and offer insurance solution at the municipal government level, and ultimately possibly it can be scaled up at a national level in the form of a pool if things work well. We'll be carrying out 2 pilots. One is for a parametric agriculture insurance, and other is for developing a parametric homeowners and SME insurance in Nepal. And the idea behind this is, again, to provide some extended support via insurance to existing social protection schemes which the government already has to help farmers or homeowners and SMEs in the event of a disaster. We are also working in our Central Asian region. Of course, modeling will be one part of the work there in terms of developing a regional financing solution. Before the COVID happened, the focus was on looking at natural hazards, but now we have added a pandemic modeling component also. So we will be looking at a disaster risk financing solution which takes into account both physical hazards and pandemics at the same time. So, and as part of the regional solution, we'll try to see what type of innovative solutions can be developed with the help of the reinsurance market and also the capital market. So that the pandemic modeling will inform what would happen. We are also looking at post-COVID-19 response in terms of restoring livelihoods and how soon that can happen. And one of the challenges, whether it is in the agriculture sector or in the SME sector, is access to finance. So we are trying to see how insurance companies and lending institutions, that is the banks, can work together and also with the integration of technology, what type of innovative solutions can be developed. We will be shortly commencing a pilot in the Philippines, which will look at cash flow-based lending components so far financing is concerned or providing credit is concerned, using artificial intelligence, machine learning, and other fintech-related tools just to understand the risk and also the cash conversion cycle. And then we will also try to link it with the help of remote sensing technology with crop insurance. And so after a loan is issued with a satellite imagery, one can conduct a remote monitoring and evaluation and actually find out whether the farmer has used the loan proceeds for which they have taken loans, And then over a period of time, if the crop gets ready for harvest, they can provide information to the farmers about prices in the market. The bank also knows to what extent the farmers will make profits or not make profits, so that they can plan for not only providing loans for the next cycle, but also for recovering their existing loans. And should there be a disaster, of course, the agriculture insurance can trigger in. So this will be a modest pilot we will be doing. And in addition to that, we feel that financial awareness or insurance awareness needs to be built on. And all these programs which we will be doing, they will have a very important insurance awareness component. Thank you.
Thank you, Arup. Again, very interesting insights on what the ADB are doing. What I'm going to do, I do have one more question, but actually before I go on to my last question, I've actually also had a question through the chat function. So I'm actually going to read out the question from the chat first, and then we'll come back to my other question later on. So I have a question from Lee Wolfform from the OECD. And the question is, do the panelists see the solution to the protection gap in emerging markets as a commercial insurance product for business, or a sovereign risk financing solution providing insurance to governments, or maybe a mix of both? Who would like to be the first to take that question?
Okay, let me take it.
Lesley first, and then Arup.
Okay.
Thank you very much. So I believe that it will need to be a mix of both, because within the broad market segments, there are different pockets. There is a segment of the market that can be best served by commercial insurers that have a profit motive, but there's also a segment of the market that requires some level of subsidies for it to be viable. So then you could look at, say, agriculture as one broad sector. For the large-scale commercial farms, it could make sense to provide insurance them through the normal commercial markets. But for the small to medium-scale farmers, they will need some level of subsidy, and this subsidy can be through the national agricultural insurance schemes, as we see in countries like Kenya, like Nigeria, like Zambia, or it could be through a sovereign product like ARC, where effectively we offer the insurance policy to the government. If there's a payout, then the government pays out to the farmers through the normal government mechanism, but they effectively have the policy as a trustee on behalf of the farmers.
Arup, are you agreeing? Do you have some other comments to add?
Well, just to supplement what Lesley has mentioned, of course, it has to be a combination where you have the sovereign and the non-sovereign products. The issue when we have been discussing with policymakers in our part of the world, what you call the shortcoming of the sovereign products is from a political standpoint. The government says the government employees, they say that the people or the public are not aware of the benefits what they are getting. So the government just cannot score any political brownie points even when an insurance triggers, So they are looking at sovereign products where ultimately the end beneficiary can see certain results which can be demonstrated, So that is something we need to ensure, and possibly technology can play a role in terms of ensuring those types of cash transfers actually happen post-disaster, and the money doesn't lie only in the government's coffers. So that is number one, which I would like to flag. The second thing is, even if we have a sovereign product, the public or the industry, whoever is the beneficiary, they also need to have skin in the game. So they have to share the premium some way or the other, depending on their ability to pay. Anything offered free, again, there will be very little awareness of the value of insurance, and not only about the value of insurance, but also about the risk mitigation and risk reduction measures which they need to take which will make insurance more attractive. Otherwise, with multiple disasters, many more emerging risks happening, more frequently happening, the insurance industry will soon run out of capacity.
Hannah, can I just add one thing?
Sure.
I want to follow on from that with 2 points. One is extending Arup's point. I'd say that I think it's the issue of it's wider than it's not sovereign, it's not inclusive or other kinds of tools. Really, it is insurance and risk financing as a package of a much stronger risk management approach, structures by government-led, if you like, that is really key. So so for example, this issue of the integration of industry expertise in terms of modeling into development, into public financial management, that's just almost as important as any kind of actual risk transfer solution or transferring risk from one place to another. That's actually what is really key, and it's insurance and risk finance as a catalyst, as a way of really building resilience, but not just on loan. It's got to be much wider than that. I think it's the second point as well. This is not necessarily my area of expertise. Other experts across the panel on the risk financing side. My understanding is from talking to industry experts, there's very little appetite, for example, for sovereign risk for anything like pandemics. Apart from anything, of course, you can't really pool risk when every single country of the world, of course, is hit by a catastrophe of this nature. You're going to get hits from every single place. So immediately that undercuts the possibility, I guess, and the essential foundational point of insurance, that you pool risk across places that won't have a catastrophe or a crisis. So I don't know that there's necessarily a huge appetite for that, but I guess maybe specialized tools, specialized instruments for particular circumstances. But I do leave for the other colleagues with a stronger experience in that to maybe continue that thought.
Thank you. I mean, Lesley, do you have anything to add maybe on Jan's last point there, talking about the appetite of different countries to come in sort of on sovereign risk pooling arrangements following catastrophe? Because I think looking at the work of ARC, I mean, it does work on the idea of the different countries coming together and sort of pooling their risk. And I mean, you've seen this in the past with, I guess, climate change sort of catastrophes and droughts and things. And there has been uptake, and there have been governments sort of signing on. So, I mean, how do you see this with your pandemic coverage that you're developing?
So then sovereign risk pooling definitely works much better for weather-related risks because you have the natural geographical diversification. If you're covering, say, drought and flood in one country, it's unlikely that you will have both within the same year. And also, if you're covering just drought, usually you have a drought affecting only a particular region at a time. So it's a lot easier there. On the pandemic side, then depending on exactly which pandemic you want to cover, the response could be different. In our case, I think the big difference is that we're not covering the full economic cost of a pandemic, but we're providing governments with funds for the initial response. So the limits will be typically much lower than the limits you would be buying, say, in a business interruption product in a country like the UK. So it's broadly the same type of coverage, but once you start to look at the details, it's not exactly the same.
Sure, no, good point. Thank you. We have a question from Paulo Viana from SUSEP, the Brazilian Insurance Authority, and this is concerning parametric insurance. What are the main characteristics a trigger should present in order to have an efficient cover or coverage?
So I suppose that's another one for me. If you don't mind, I'll just jump right onto it.
Please do.
So then really the trigger needs to be transparent, it needs to be independently calculated, and it needs to have an extremely high correlation with the peril that is being covered. So you should be able to move from a trigger like rainfall to modeling out the economic impact of a drought. Otherwise, if you don't do this, then you will have significant problems with basis risk, where the modeled numbers are very different from the losses on the ground, which in turn damages the confidence that people have in the product.
Hannah, I might just make one addition on that
Sure.
issue, is that the IAIS did develop a paper on index-based insurances a couple of years ago, and we did have some discussion there about the characteristics of the index that would be important, and also some of the issues relating to dealing with customers at different sort of levels. So it certainly refers to that paper, and if they want to discuss it more bilaterally, then be happy to.
Thank you, Craig. Yeah, I have another question. This is from Greg Asada from GIZ, and it's looking at business interruption cover. The few policies available in developing countries are usually contingent to physical damage or loss. Are any of you working or aware of work on comprehensive business interruption coverage?
I can say that we're starting a little bit of work on that, but again, it's an early stage. This is a good example of what I was saying about what customers actually want. It's pretty clear that it's not just the exclusion of the pandemic, but it's actually what is the interruption cause that is important here. So the first step is to actually go back to the customers and find out not just what we can sort of plaster over to solve their immediate need, but also what is our real insurance response for small businesses in particular. And I think in the inclusive insurance world, we have devoted a lot of time to overcoming problems over the last sort of decade or so for households, but we really haven't well understood the insurance needs of enterprises, and I think we still have a long way to go there, but that's where it's an important step to take.
Yeah.
From our side, Hannah, just building on what Craig says, I totally agree with that. So this is going to be one of our area of focuses over the next 6 months to 12 months, I would say. There are significant challenges. The word comprehensive worries me. I don't quite know what comprehensive is a word that's too comprehensive. So that's a bit of a concern. But I think you really have to unpick that. Really, well, what are the needs? But I think whatever you have to develop, obviously it has to be wider than pandemic and health. It can't just sort of sit alone and focus on just this little silo. As critical as this silo is right now, it has to be able to respond to other kind of crises which might befall an SME.
So I've got one more question here that's come in through the chat, and actually very topical, I think, for today's webinar. And I mean, particularly as I was listening, there's a lot of similarities between the initiatives going on in the different organizations. And the question is there a formal mechanism forum for the collaboration among the stakeholders, such as the World Bank, IMF, UN, etc., to develop a coordinated plan to take these ideas forward, improving resilience, and also recognizing that the next crisis will be different? So I heard a lot of you sort of mentioning about how you would be reaching out and talking to some of each other, so we say bilaterally. But are there any forums that you're members of where you're discussing this together?
I think, I mean, if I may start on this one, I think, well, certainly the one which is of paramount importance to us is the Insurance Development Forum, which colleagues would maybe be aware of. So essentially, this is industry-led, and this is co-chaired by Denny DeVerne of AXA XL, and chaired by and then co-chaired by the head of UNDP, Achim Steiner, and the head of MIGA from the World Bank. And then a similar structure operationally, we have led by industry, co-chaired by ourselves, UNDP, and then the World Bank there. And then underneath that, or not underneath that, you wouldn't even say that, you have a steering committee, which is some of the weightiest institutions from the private sector, mutual sector, pretty much in the world. 80% of the entire world's property and casualty business is in the steering committee, for example, at CEO level. But perhaps more importantly, this is an operational level which involves many different parties, including, for example, ADB on the line, and lots of other parties, both public and private sector. And increasingly, this is becoming an operational, if you like, entity, at least in terms of its coordination and coherence. So we have, just as a particular point, we have this tripartite agreement, which is quite heavily financed by the German government, which with UNDP and the Insurance Development Forum, particularly the private sector actors. And we are in the process, a final process towards country selection. Now, part of that process of country selection is also about understanding what's already underway. So there's a very strong focus on making sure we are not duplicating what already is underway. So just to give you an example, I think Vietnam is an interesting country for lots of different reasons. So that's likely where we'll have resources from UNDP and the private sector on sovereign risk. But at the same time, we know ADB has been working significantly in this space, and Arup will, of course, correct me if I'm wrong, but especially in the municipal, the sort of subnational side of things, with some of the critical cities there, which are hugely affected by issues of climate risk. So we are actually, so I guess it's a mix of things. There are formal mechanisms like the IDF, such as Insurance Against Global Partnership, but I think really the critical route is actually at the country level. And making sure that we use all the networks and so forth at the country level to make sure we do not duplicate anything that we do. And that's where, of course, supervisors, regulators also play their part in making sure they keep us on the straight and narrow. Over.
Thank you, Jan. And that's also actually a nice advert almost for our next call. So the next webinar in this pandemic series is going to have actually Equishway, who is the Secretary General of the IDF, providing an introductory presentation. So we are running, well, we are out of time now. Hopefully you'll forgive me and let me have just a few more minutes, because I want to just ask one final thing to the participants. And this is because the A2I mainly works with insurance supervisors. The majority of the participants on today's call are insurance supervisors. So I'm going to ask the panelists to be very, very brief and just make sort of 1 point each. But if you could provide sort of insurance supervisors with advice on how they can go about addressing the protection gap, what would that advice be? And this is building up to our third call as well in the series, which will be a supervisor-only dialogue, where we will come together with the supervisors to discuss this. Thank you. I'm sorry, I should also give, maybe we do reverse order this time to be fair. So Arup, would you like to start here? You're on mute, I think, Arup. Sorry.
An insurance supervisor's perspective, I would like to stress upon the importance of financial awareness and education. Even during COVID-19, there have been a lot of measures taken. In Asian countries, they have permitted withdrawal of money from pension funds and provident funds. and this is something which has not been accompanied with proper education, and there is a risk in terms of widening the protection gap rather than reducing the protection gap, because people often undermine what their post-retirement income needs would be. Then there is another thing which is happening post-COVID is the deferment of the premium payments on insurance policies. And again, there are not many insurance awareness campaigns. Before that moratorium ends, if they don't pay their premiums, their policies may lapse. So these are certain types of things where insurance awareness should be very much there. The insurance supervisors also should look at incentivizing, developing some of these new popular products which Craig mentioned. And those covers should be simple to understand. And the loss of income and business interruption type of policies should be important. And finally, there have also been relaxations post-COVID on capital and solvency requirements. In emerging markets, this also restricts their underwriting capability, especially to underwrite catastrophic risk. So this will also have an indirect bearing on the protection gap. So these are issues which the insurance supervisors should be constantly in touch with. Thank you.
Thank you, Arup. I think you snuck 3 points in there, but they were 3 good points. So I'll let you get away with it. Lesley, over to you now, please.
So then, in addition to everything that Arup has said, for me, the big area that supervisors should focus on is distribution, because one of the biggest challenges to reaching many people that are not currently covered by insurance is the high cost of distribution. And we need to have more innovative models in terms of how we can reach more people. Underwriting expertise and capital is not really a big hurdle that's easy to deploy if you can find an efficient way to reach the end users.
Thank you. And Craig?
Yes, I would fully support those suggestions. I've got one other one that might be relevant very quickly for insurance supervisors, and that is, I think, the challenge of getting almost anything done in the current climate is to work out who's actually meant to be leading these kinds of initiatives of market development rather than sort of more, let's say, tactical interventions. And so I think it sort of has to be clear that the insurance supervisors are going to step up and take a leadership role and make sure that they understand that role between them and other parts of government. So a challenge to bring that into a sort of reality would be to say, in their country, could they host a forum like this? And if they think, yes, we could do that, then that's great. Then that gives them, obviously, the confidence and leadership in this space. If alternatively they say, well, we'd have to think about it, we'd need to ask these other people, things like that, then you need to clarify who's actually going to be moving, and not much is going to happen until it's pretty clear who's meant to be actually deciding to move forward. So I think it's important to have a clear goal about, you know, who's leading the policy, and that is an empowered person.
Jan, any sort of final remarks to add to the great points made so far?
Those are all fine, really. I mean, one minor point, I just say maybe to summarize it in a certain sense, if I dare to say, is that, you know, that obviously supervisors have a platform, you have a convening, power within your community, so utilize it, in as best you can, in order to, on the one hand, see what can be done differently, what are the kinds of products, work with your industry partners to see whether new products, different kinds of products can be developed in order to learn from the moment of COVID and be better prepared in the future, work with the industry to see how we can integrate the expertise of industry into more wider development issues and public financial issues, certainly, and then also perhaps look at these large-scale, if you like, vulnerabilities that may exist in your countries and communities, which also insurance and risk financing could really play a role, and probably are playing out right now in terms of the lack of resilience that you probably can see. Over.
No, thank you. I mean, a lot of food for thought there, which we'll take forward to our next call, which is on the 23rd of July on public-private partnerships, and then the final one, which is supervisors only, on the 30th of July. So it just remains for me to say a big thank you, firstly to all participants for staying on for this little bit of extra time at the end, and then particularly to the speakers who have all dialed in from very different time zones, some very late, some very early, so a huge thank you to you as well. And I hope to see you all again in 10 days' time on the next call in the series. So thank you, and hopefully see you soon.
Thank you.
Thank you. Thank you to everyone.
Thank you very much.